By January, what you buy from China may come with an additional 25% markup. That's because President TrumpDonald John TrumpFour takeaways from Heitkamp and Cramers' tense final Senate debate. Obama takes jab at Trump. Nobody in my administration got indicted. Lawyer for mail bomb suspect's family. He found a father in Trump more threatened to slap new tariffs on half of all U.S. imports from China. Yet, there's a slim chance the new tariffs and the escalating trade war with China could be put back on hold when Presidents Trump and Xi meet at the end of November at the G20 summit in Argentina. Why would Trump agree to a ceasefire in the U.S.-China trade war when anti-China rhetoric in Washington seems to be heating up? Maybe he'll see the move for what it is, a win for U.S. consumers and manufacturers. Or perhaps he simply doesn't want to ruin the good personal relationship he and Xi have. While it's unlikely there will be any significant deal between the U.S. and China before the leaders' meeting, it is possible the presidents could commit to entering into negotiations. And those negotiations could produce an agreement that neither country will impose new tariffs on the other. This would be similar to what the U.S. and Japan recently agreed to regarding trade negotiations. The difference would be U.S.-China negotiations aren't a trade deal that requires Congress's approval. Back in May, Treasury Secretary Stephen Turner Mnuchin Saudi Arabia affair presents a moment of truth for Congress. Saudi Crown Prince Khashoggi killing a heinous crime. Treasury sanctions 8 for ties to Taliban, Iran militia. More quip. The trade war was on hold. But this lasted less than a fortnight before President Trump announced new tariffs on $50 billion worth of Chinese goods. Putting the U.S.-China trade war back on hold would surely boost U.S. business confidence. And it's unlikely negotiations would have as short a shelf life as before efforts, given Trump's involvement. Bad news is that this year's tariffs, now applied to $250 billion worth of Chinese goods, are likely to stick around for a while. Even with the potential for an amicable armistice in November, a number of events over the next 6 weeks will shape the future of U.S.-China negotiations. The Treasury Department recently released its report on foreign exchange of major trading partners. And once again, the report stopped short of calling China a currency manipulator. Not calling China a currency manipulator bodes well for negotiations, at least until the next biennial report comes out. Just because China's currency has lost up to 9% in value over the last year doesn't mean Beijing is manipulating its currency. In fact, a weaker yuan will offset some of the benefits China's Ministry of Commerce hopes to gain in its upcoming Shanghai Import Expo planned for early November. China International Import Expo will be a chance for President Xi to restore business confidence in China, confidence that has waned in light of China's stagnating economy and the emerging trade war. To offset some of the political costs, there may be new commitments to reduce certain tariff rates. There may even be announcements to reduce investment restrictions, though these would be limited. Chinese policy will continue to mirror U.S. trade policy, which is being tough on your competitors while attempting to woo third-party investors. More likely, President Xi wants to make good with businesses that have been less critical of Washington's trade war. His speech will set the tone for Chinese officials who attend the ASEAN, East Asia, and APEC summits in mid-November. Vice President Pence will represent the U.S. at these important meetings. Chinese officials already expect an uncharacteristically aggressive tone from the vice president on trade and other security matters. A recent speech he gave at the Hudson Institute has Chinese officials considering further backing off trade talks. Not only do Chinese officials worry that any deal with the U.S. is going to be more than a trade deal, they still see an American side that keeps increasing its list of demands. And they're willing to sit out until the U.S. side can get its ducks in a row. This may not be enough to keep the presidents from working toward a trade truce at the G20 summit, but it does guarantee that progress on U.S.-China trade and other issues will be a long time coming. Riley Walters is a policy analyst specializing in economic and technology issues in the Asian Studies Center at the Heritage Foundation.